Are you struggling to understand transfer pricing documentation? Or maybe you have heard about the local file but are not sure what it includes or why it's important. In today's video, we will break down everything you need to know about the transfer pricing local file, its purpose, key contents, compliance requirements, and best practices so you can stay ahead of tax regulations and avoid penalties. Hello everyone and welcome to the Tax Gate. Hit the subscribe button and let's get started. Before we dive into the local file, let's start with the basics. Transfer pricing refers to the prices charged for goods, services, and intellectual property between companies within the same multinational group. Here, tax authorities require these transactions to follow the arm's length principle, which means that they should be priced the same way as transactions between independent parties. To ensure compliance, the OECD introduced a three-tiered documentation approach under BEPS Action 13, which includes the following: the master file, which is a high-level overview of the multinational group's global transfer pricing policies; the local file, a detailed report focused on the specific intercompany transactions of a local entity; and finally, the country-by-country report, which is a breakdown of financial and tax-related data for each country in which the group operates. And in today's video, we'll focus on the local file, which is essential for transfer pricing compliance. So, why is the local file important? And here's the answer. Transfer pricing local file would be important mainly for the following reasons. First, tax compliance. Transfer pricing local file ensures that your related party transactions meet legal and tax requirements. Also, audit protection. Without a local file, you're more likely to face tax adjustments upon tax audit phase. And finally, avoiding penalties. Non-compliance can lead to heavy fines and double taxation issues. Keeping a well-prepared local file helps mitigate risks and ensures transparency in your intercompany transactions. Well, now, let's talk about the key components of the local file. The OECD guidelines categorize it into three main sections as follows. The first section would include information on the local entity, description of the business structure and operations, details of the ownership structure and relationship with other entities, industry and economic analysis. The next section, and the most critical one here, would be the details of controlled transactions. For each related party transaction, the file must include type of transaction, for example, sale of goods, provision of services, royalties, loans, parties involved and transaction amounts, functional analysis or FAR analysis, like who does what, or who assumes risks, transfer pricing method used, justification for pricing, comparability analysis and benchmarking study to support arm's length pricing. And finally, the financial information. The entity's financial statements. Breakdown of revenues and costs related to intercompany transactions. Reconciliation of data with transfer pricing policies. Having all this information properly documented is essential for compliance. Good. Now, let's talk about transfer pricing methods. The local file must specify the transfer pricing method applied to ensure transactions are at arm's length. The OECD recognizes 5 key methods as follows. The comparable uncontrolled price method, which compares the price of the related party transaction with similar transactions between independent parties. The resale price method, which is used mainly for distributors, where the resale margin is compared to industry standards. The cost-plus method. This method adds a market-based markup to the cost of providing a service or product. The profit split method, used for highly integrated operations, where profits are split based on the parties' contributions. The transactional net margin method, and this method compares the net profit margin of the related party transaction with similar independent transactions. Choosing the right method depends on transaction type, available data, and industry standards. It is recommended to watch this video to dive a little bit deeper into each method. Well, so, what happens if you don't have a local file? Here we would highlight that many countries have specific thresholds for local file requirements, so it's crucial to stay updated on your local regulations just to avoid the following issues. Tax adjustments. Tax authorities can adjust your transaction prices, leading to higher tax liabilities. Penalties and fines. Some countries impose significant fines for non-compliance. Reputational risk. Transfer pricing disputes can attract negative business attention and damage investor confidence. A well-prepared local file equals less risk, more compliance, and smoother tax audits. Good. That was a wrap on today's video. We hope this helped you understand why the transfer pricing local file is essential and how to prepare it properly. Like this video if you found it helpful. Subscribe for more tax insights. Comment below if you have any questions or if you want me to cover a specific tax topic next time. Thanks for watching TaxGate, and I'll see you